All right, I'm down here on the floor of the New York Stock Exchange with Randy Bateman. He's Chief Investment Officer at Huntington Bankshares, Huntington Asset Management. Randy, thanks for joining us.
Hey,
coming in all the way from Columbus. We appreciate it.
Your favorite city.
Let's talk about Ben Bernanke here. I mean, he's the man of the hour today, just like he was yesterday. And you're increasing your exposure to oil kind of because of the Fed.
Well, certainly the Fed has tried to make this economy robust. But the problem, I think, is that we've pushed interest rates down so far, and they are generally helpful in a manufacturing-based economy. But we're in a service-based economy, and lower rates really don't have the stimulative impact. What we really got to look for is some type of reprieve from the regulatory issues, and that's really what's really scaring a lot of the smaller businesses away from hiring.
Speaking of regulators in a service-based economy, the financials are a big part or a big piece of both of those topics, right?
Always have been.
You're averse to buying financials right now, and they're firing people.
Yeah, well, it's again, it's a great deal of regulation that's taking place. I know Jamie Dimon questioned Bernanke a couple of weeks ago, and we obviously don't know what's going on. I think George Washington University did a study, and they came up with 134 new regulatory initiatives, and each one of them could have a $100 million impact. And, the unintended consequences from any regulatory initiative are significant, and the market's got to deal with those.
Randy, when it comes to financials, though, some folks are saying that, the regulations coming forward aren't going to be so onerous on the financials. I mean, look at JP Morgan. They seem to have a very, very good quarter, and maybe they're above the pack. But many folks think that that the regulations that have come through on financials may not indeed be as tough as we all thought they were going to be when they were originally set out to do. Yeah.
I think that's the big question mark. What will ultimately be the ultimate outcome of this whole thing? I don't think anybody really knows, but the banks are quite cheap. The stocks are attractive, and some of them are now starting to increase their dividends, and that'll be a good positive as we go forward.
Nonetheless, you are averse to financials. You're averse to consumer discretionary stocks. You're cautious about the economy, and you're worried about this market. Where do you put your money?
I think we are mostly concerned about currency. We've deflated our currency in a lot of different ways. We've got a doubling of the monetary base over the last couple of years, and so consequently we're looking at hard assets, tangible assets, and that includes the materials, includes the energy names, and I think those are going to be the names that are going to really help us out.
What about technology companies? You like tech as well? Do you expect good earnings?
It's been a dichotomy on the earnings. Some of the new IPOs have been really positively accepted in the marketplace that are tech-oriented, but if you look at the general tech names, it's still kind of languishing in the doldrums. Represents probably some good value there, but you just got to wonder when it's going to take place, Matt.
So what are you buying as far as equities? What are you looking at down here to purchase?
I like the dividend-based stocks right now. We've introduced another couple of funds that are really focusing on U.S. domestic equities that do pay a good dividend, and I think that's a positive. You've got corporate America that's done quite well. They've exceeded analyst expectations for quarter after quarter after quarter, and that's a positive. They built up about $2 trillion on their balance sheets, and as a result of that, we think that that's going to be expended in either stock buybacks, dividend increases, or merger and acquisition activity. If we have a slower growing economy, what better way to grow than to buy out your competition?
All right, Randy, thanks so much for joining us. Randy Bateman there, Chief Investment Officer from Huntington Asset Management.